Have had an idea what your home's worth. Now it's anyone's guess. Our property experts crunch the numbers after today's interest rate decision.
Final time. Are we all done? Definitely out. Last chance.
We're in uncharted waters now.
We're out over here. Just checking. We're out over here. All parties here. Are we out here?
Prices plummeting as Australia's property market experiences the wobbles.
It is a huge drop.
For decades, bricks and mortar has been the great wealth generator, but now many feel it's a gamble.
I think people are really concerned about what the future holds.
I was sick of doing it on my own. I'm sick of researching.
Tonight, our experts take the mystery out of the market, revealing when you should buy and if you should sell.
There's a lot of stock to choose from. Buyers are absolutely in the driver's seat. They can negotiate hard.
Time to get in now. I want security for my family.
Joanna and Grant have been wanting to buy for the last 2 years. It's only been in recent times properties in Melbourne's Narre Warren have been within reach.
This house here, it's sitting at $795 now. 2 years ago, that would have been well and truly over the moon.
Overall values are down by nearly 8% nationally since 2017, and sellers have become more realistic about prices too, making it a buyer's market.
I don't think there's a better time to buy.
But despite an influx of affordable property, there are more dwellings on the market than at any time since 2012. So why aren't people snapping them up? Potential buyers are waiting to see if prices drop even further, according to auctioneer from the agency, Peter Kakos.
It's an interesting market at the moment, and I think a lot of buyers are hesitant and just waiting to see what happens and so forth. But the reality is the heat and the frenziness has come out of the market. So the buying opportunities now are incredible.
Here are the experts' value for money picks. Redcliffe and Chermside in Queensland, Redfern and Neutral Bay in New South Wales, and Port Melbourne and Carnegie in Victoria.
It's come down a little bit, so it's affordable. Challenges to get finance.
Vendors advocate Frank Valentic.
APRA came in and tightened the screws and made it very hard for investors to get finance. So I think that's one of the biggest factors. We've had the Royal Banking Commission. That's also making it tougher for first home buyers and other home buyers to get finance.
There's an oversupply of units coming onto the market in Sydney, Melbourne and Brisbane. They simply haven't got buyers for these new apartments. So the biggest discounts will be in that marketplace.
But this advocate says they don't have great capital growth.
The old rule in real estate is land depreciates, buildings depreciates, and land is really king always in any capital city.
The investment hot zone is 20 kilometres out of any major Australian city, according to real estate expert Rob Klaric.
They've got work, they've got infrastructure, they've got transport, they've got lifestyle. The further you go out of the major cities now, the harder it'll be, and we'll see the biggest declines in real estate over the next 6 to 12 months.
Take this 6-bedroom property in Melbourne's leafy northeast. In 2017, it was valued at $1.7 million. But when the sellers put it on the market 8 months ago, no one would buy it. They've had 2 unsuccessful auctions and dropped the price by $500,000. And yet it still sits vacant.
When I found out that the prices went down so much, I was absolutely devastated.
The housing decline hasn't been good to 63-year-old Ola Zariki. She'd spent months renovating her property, but says she was forced to sell for $300,000 less than the place had been valued at only a year earlier.
When I found out that the prices went down so much, I was absolutely devastated.
So what effect will today's interest rate decision have on the market?
We're seeing signs that the rate of decline is easing off.
The market is starting to correct itself, according to Tim Lawless from property data company CoreLogic.
We are still expecting housing values will continue to drift lower, just simply not as fast as what they have been.
While some areas have weathered the pricing storm, others have taken a battering. Over the last 12 months in Brisbane, prices in Carolee have risen by more than 6%. They've crashed in Carroll Park. Values in the Blue Mountains west of Sydney haven't been hit too hard. In Bass Hill, they have. In Melbourne, prices in the city have grown. In Ashburton, they've dropped. Uradley in Adelaide is a top performer. Happy Valley isn't. Mornington in Hobart has increased. Sandy Bay has decreased. In Canberra, Fraser has done well, and in Darwin, East Arm has fallen by more than 25%, while in Perth, Winthrop has fallen by more than 17%.
Even though rates were left on hold today, it's still our expectation that we should expect rates to come down later in the year, potentially even next month. So of course, any cuts to the cash rate will have a positive flow-on effect to the housing market.
Interest rates haven't been this low since the 1960s, but experts don't believe further cuts will have a huge impact, as it's still tough to get finance.
I don't think we're suddenly going to see this change, that the market goes to being a boom market and it's all gangbusters from there.
Prices could go down a lot further if economist Stephen Joski's prediction comes true. He believes in around 2 years, China will likely face a financial crisis.
The Chinese government would respond to it by much tighter controls on money leaving China. You essentially lose a lot of buyers for, maybe up to 2 years. They would likely disappear from the market.
So the ideal time is to buy and sell in the same market. However, if you're entering the market, I guess you've got to be a little bit cautious that you're not overpaying.
This economist says some are waiting on the federal election result before buying or selling.
If the Liberals win, then property prices would be a bit higher than if Labor wins, but only at the margin.
There's also been a lot of talk about negative gearing, the tax subsidy for investors.
Labor has a fairly explicit policy of winding back future negative gearing, but they're grandfathering the existing negative gearing investments. So that will have some impact, but it's not going to kill the market.
Well, I think we need to keep in mind that this policy was first dreamt up when the Sydney and Melbourne markets were moving at an accelerated rate. And of course, that's no longer the case. Both of those markets have cooled considerably.
Real Estate Institute of Queensland Chief Executive Antonio Mercerella claims the proposal could lead to a dramatic drop in stamp duty revenue and that rental prices could rise.
There will be a negative impact on everyone, and to simply think that this is only an issue for investors is incorrect.
But according to experts, with our growing population, the long-term outlook is excellent, as property is all about supply and demand.
But I think we should wait until we start seeing some growth. The moment we start seeing some growth, then we know, oh, this is the bottom, let's get it now.
I'm going to have to disagree with my wife. We'll talk about it after the camera's turned off. But if we continue to wait, we're going to be talking about this potentially in 12 months' time. The housing market is flat because everyone's waiting, sucking their thumbs and seeing what's going to happen to the market.
Strap yourself in. This is going to be a roller coaster ride in real estate over the next couple of years.